What is up, people? Um, so this is another episode of me chatting waffle. What I'm going to do this time is take you through all of the pairs that I look at as a rundown from the 6th of January, what I'm kind of looking at, and then obviously build some sort of credibility around whether or not I'm doing the right thing. This is obviously personal and for potential benefit of outlooks within the forex trading live community. So I'm going to start off on Euro US dollar. I mean, when you look at it from a weekly point of interest, it's there is a point at which this will return and hopefully mitigate some sort of equilibrium here. Kind of push up, maybe mitigate that, and probably continue down. We are heavily bearish, but we can fight the momentum all we want, or we can trade with it, as I've been mentioning. So what we're looking at here realistically is a heavy bearish trend, a break of structure to the downside. This most recent leg, it has mitigated some of the refined zones, sweeping liquidity, and obviously we can look at elements like this, but at that point we have had the change of character and there is chance for a reversal. So we don't really want to look at this particular area. We can do, but obviously at that point we've already had our aggressive initial reaction from the flip of the supply to the demand. So yeah, we're not really looking at any buys as of yet. This woke me up this morning. This nice little wick here. All of my entries have been obviously all of my alerts have been taken. We've got a nice sweep of liquidity so far, and we've got this sell to buy wick here, which has been mitigated, and there's still demand control. So we don't really want, I could probably have placed a trade somewhere around here as a limit order with a 60 pip, and kind of just traded off that. That's kind of valid, get a little 1 to 2 going on. But because we're so far down the leg, I don't necessarily need to see some 4 hour reaction because we are still technically bearish. So looking at the 1 hour, I'd like to see a sweep of either this high and then a downwards sort of trend here, or some sort of flip to the downsides because we're currently reacting off this. There's a clear mitigation of this demand zone aggressive, which to me looks like it's going to continue up still. So, I'm just going to play my cards with that one, and kind of wait in the markets to see what comes of it. And you've next got gold. So gold's doing some bit of a madness at the moment. I know a lot of people like to try and trade gold, and it can be very good, but it can be very bad at the same time. I mean, what we're looking at here is still bullish. We've still got bullish interactions, but we've seen a weekly change of character here. We've seen like a wick of the lows and a respect to the highs and a sweep of the highs as well. So obviously this is kind of ranging in accumulation. So we've got this whole setting here, which is just in a range. So when it's trading upwards, I don't know why that's happened. That's annoying. I'll have to do that later. When it's trending upwards, you can just get in buys. But here we've had this massive drop off, which could just be a liquidity sweep because it has mitigated this demand level here, swept it, and there is a potential for the downside. But obviously, price is trying to fight between the buyers and the sellers. We swept this sell side liquidity and we swept this high here. So realistically at the moment you can look at some short-term plays. There is this buy that I've looked at. I haven't actually activated it, but it's just following 4 hour order flow after the sweep of liquidity. There is some inducement here into this demand level if you're looking at buys, because within a range you want to set your area. You want to buy anywhere above this line. You want to buy anywhere below the line and sell anywhere above it, realistically, if you're going to make some sort of profit. Like anywhere here, a short would have been good, a buy would have been good, vice versa, even buys here. So until it breaks this range, if you are looking to play the range accumulation, you're not going to be holding massive trades because you don't know where the market's going. So as we see here, there's been some nice breaks of structure. There's been a break here. Eventually there was a break there after the liquidity sweeps. So obviously it was trapping some sellers here thinking, oh, the market is sweeping the highs. and it just respects this demand, and it's broke again, come back in, and this is discount level, sweeping and mitigating sort of this refined area, and all I'm looking to do is a quick kind of 1 to 2 to break these highs, and then that should be sorted. So that is pretty valid. So that's the only play I had on here, and if it doesn't work, it doesn't work. If it does, it does. It's valid to me. So we'll see how that plays out, and I'll get back to you to see with the results, because I will be updating my live results as we go on, and I will show you exactly where I've took profit and everything. And this might be better than signal groups because I'm not trying to profit off it. I'm just giving you some advice. And here we've got AU, so it's in a weird area at the moment. I'm not too happy about it because it's showing signs of reversal. We've seen this massive weekly low, this demand. It's going to have a clear reaction, but whether or not it's going to fail is a completely different story. Obviously, we'd like to see some more confirmation to the upside or some sort of trend and reversal before we start getting involved in any buys. So the leg is quite low. Somewhere like here, it did a pullback and just kept going. So we just don't know. You've just got to wait for the confluences to come in. You can't predict the market. You've just got to trade what you see. So we have had the initial change of character here. It was a very heavily manipulated wick, filling some of the fair value gap. The next area I'd look to short from is probably up here on this daily supply, because it will get a load of buyers involved in the market when realistically it is still bearish. What I'd like to see now is sort of a close of this high, come back into here, do a 4-hour change of character to provide enough high time frame momentum, and either get in on the change of character or the break of structure and find targets here, because I know for a higher probability than not that if the market is to do that and reach this level, even if it does short, you're still able to grab some sort of a profit out of the market. So the next place for me is that daily, and then alternatively I can look at it as a flip opportunity. So if it's not going to go bullish and it does reverse, it comes in here, does its initial reaction, kind of starts flipping, we can get involved in a nice short and a continuation. So there's the two opportunities with AU, and you just have to remain patient, because right now the market is not giving me, it's giving me signs, but there's nothing that I'd actually execute as of yet, especially with AU. So now we go on to GCAD. This is one of the alternate pairs. I haven't done a lot of back testing on these, but it does tend to trend very well, and it does like to sweep lows, like here for instance, this nice buy to sell, nice in premium continuation. Probably get a couple of shorters going on here, getting a nice reaction from the shorts, and then bam, just smash them out. So that's the issue, as I was saying earlier, with looking at short in the market and everything and getting the reactions. There's a nice reaction here and another one there, and people get involved and they want to go a third time for the short, and it just doesn't happen. And meanwhile, all the time you could have just been doing buy, and then this is a nice buy as well, because you see on the other side of the market it's got a sweep liquidity. So we're coming up to this area now where it can short, and it looks like it might do, because we are entering this area very high up in premium, and we've had this initial pull and this initial impulse react from the demand, sweep liquidity, and on the weekly that is failed to create a new high. So we are looking at potentially getting in some shorts here, but I'd like to see a bit more momentum, because for me it still looks bullish. You've got a daily breaker structure and it's respected this weekly here. We have had the change of character on the daily, so it swept the highs and the lows, and I am looking at this area as an area of interaction for potentially looking at supply control. So I would like to see a change of character on the 4-hour here to be able to actually warrant getting involved, because we got a sweep of the highs and we got this wick into the low here, grabbing some buyers. So I like to see that taken out as well. So a 4-hour change of character from the 4-hour supply. If you can do an hourly, it is valid, but where the market is at the moment on this setup is kind of in the middle of everything. If you look on the daily, it's kind of in the center. It's not high, it's not low, it's kind of just ranging in the middle. So it's like near the equilibrium. I mean, it is kind of valid on that leg, but yeah, I'd like to see either this flip and getting some buys potentially, if this starts to flip or whatever. Just see some nice reaction, getting like probably the second or third one of them as a continuation. Or I'd like to see this react and probably fail that demand, go lower, and probably catch something here. So you don't have to get in the markets all the time if something's not showing you, if it's not screaming in your face with obvious price action, you just wait. But yeah, as I was saying, there is a valid one here which I probably won't get involved in because I'd say it's mid probability. But from this 4-hour supply, we can see a 1-hour change of character. So if that comes down, sweeps, you could potentially get in lower. But just looking at price action and how the market is sweeping the lows here, it is bullish. We've still got bulls in play. That is a clear sweep of liquidity, intention, break of structure to go higher. So there's nothing indicating to me right now that I would like to short the market, because I just don't want to get stung and then in the post-mortem analysis say, oh, I probably shouldn't have done that, because that is how you should look at trading. Never look at it as I'll do it anyway. It's always got to be, if you were to look at it in hindsight, would you have still done it? And if you would, then do it. So this is GU. This is one of the very volatile pairs, but you can get some nice profits from it when it runs. So let's look on the weekly, because the daily's not clear enough for overall direction. What I was looking here is you've got a clear bullish market. It is mitigating some very extreme demand levels, and right now we could look for a reversal. Nothing's indicating to me now that there's a short in the market. It is still bullish. Once this structure breaks to the downside, comes to here, then we can look for some shorts. But all the while it's bullish, you just got to continue the trend. So what I'm looking at here, there was a previous sort of buy area here where it did the change of character, it broke structure, came back down, gave the reaction. I actually took a loss here as well, because to me that was valid, but it came lower. And what we're looking for now is either a short from here as a continuation, but I want to see some obvious short narrative because it is very low in the leg. You can continue on. If I was to do a limit order on a short, it would be valid. It would be in this wick. So I would be looking at something like that as a 60 pipper, or wait for some extra confluence. But alternatively, what I've got marked up here is this structural daily change of character. This has all been mitigated. It's all efficient pricing and some sort of reversal. And you don't have to get involved in the first change. You can wait for it to continue up, show some extra signs of it potentially going further. And what you'll be looking to do is probably, if it is going to turn bearish from here and we do get the reaction, it'll probably come up into here and flop. Alternatively, it will continue this trend and just go higher. And what you want to look for in places like here is people are looking to short and buy the market, they're not too sure. Just look for the signs, look for the continuations, or look for the reversals, and they're the hard ones to decipher, because that will take you a long time in your trading journey to figure out what is a continuation and what is a reversal, and how to look for it, because there will be signs for both of them, and you just have to look out for what fits the plan, what makes more sense than the other. And if it's wicking the highs, is that a liquidity sweep, or is it signs of failure? If it comes back into a zone and respects the demands, do we continue buys? So they're the ones that are kind of, they're not as good as these kind of trades where you get the nice changes of character from the swing lows, because that's a higher low here, and then that's obviously the previous low, and it's just looking at swing structure and looking at the overall dynamics of the market. So obviously here it would be nice if we could potentially get short, because the market is technically still bearish, but where we are on the leg doesn't determine me to warrant doing a short as of yet. So what I'd like to see this is all respected, either a 4-hour, or as it comes up into this area, if I see a 1 hour, it is valid. Yes, I can do a change of character and I can do a short. It's whether or not it's going to do this here. If we get something like that happy days. Potential short opportunity if it has respected this supply. At the moment we're on the decisional and we're low on the leg, so this is a low probability setup. But what I do like about this is the fact it has wicked the high and it's closed below. But we are still, reacting off this sell to buy. I'm pretty sure EU was very similar in what it's providing in the market as well. So that is the rundown as of yet. Is this, which one's this? Oh, it's already on there. So this is GJ, and this one also trends relatively well. Let's have a look. So I'm in a paper position here. So I haven't actually took this one either. So we're just looking at the overall trend. 1 second, let me just pull out. So it is very bullish. It's still bullish. It's still bullish all the way up, and that is looking like it's creating new highs. We're kind of reacting off of this buy to sell wick, and at the moment there's obviously down here some really good buys anywhere here. We've mitigated this almost, probably a bit of inducement. We're looking at the expectational order flow to break this high, so hence why I have put a position in. So we've got this nice reaction off of this supply, and what I like to do is, previously I'd look at shorts here, look at the sell side liquidity, look at this go off, and you've probably got some shorts in the market thinking, oh yeah, this is a good opportunity. But I'm seeing this demand here. This was the wick. It reacted off. I waited for the wick reaction and did an execution. It was kind of slapdash, but it was where the initial supply was. So I was looking at this area as there would probably be a reaction off it, which there wasn't. So happy days for me. But I knew that area would not hold at all. Like, if that was the holds, then it's a very low probable setup, and you probably won't be very consistent in the markets if you're short in positions like that from a clear high time frame dynamic of the extreme being mitigated. So what I'd like to see now, ideally, is this to break and create a 1 to 2 to this next high, because I'm not sure if it's going to go anywhere past this as of yet with the position I have on. So we will see. This is why I like 1 to 2s in the markets, from obviously getting a high time frame narrative, and you do a couple of them a month. I've got a few pairs here. Got like 8 pairs. There's lots of opportunities in the market. You don't have to execute with absolute precision all the time, because I've done that, and I'm sure at some point in the future I'll be able to understand it better, because I do know someone who does low time frame insane trades all the time, and I think, fair enough, mate, you are a don, and it'd be nice to get to that point. But I think looking at trading from this perspective and getting the consistency in the high time frame approach and the 1 to 2s and 1 to 3s is the best way to grow your account whilst learning and not having the stress and the pressure of trying to look at the markets every single day, which has ultimately held me back from where I want to be. So what I've seen here as well on the 1 hour is this nice sweep of the lows, as a few of them have done something very similar, where the lows have been swept and it's clear intention for the expectational order flow to continue higher. We haven't actually broke this leg yet. We have had a reaction, so obviously sellers in the market are becoming more prevalent, and it would be nice to see at least this 1 to 2 become active, but I will let you know anyway. And then lastly, we have my least used pair. So this is USDJPY. So this is a bit different to the normal ones I use. Changes the character and all of this kind of stuff. It's better just breaks the structure, or looking at where it is in premium or discount, waiting for the sweeps liquidity. So obviously here we've got this bull trend, we've had the change of character, we've got this demand chain going on, we've got this nice sweep of all of this sell side. You've got this accumulation range, we've got the continuation, and then we've got this nice sweep here. So any of this kind of stuff would be nice for buys, and you can just keep buying in the market. Obviously, when it gets somewhere like here, the leg has gone on for a pretty long time. anything there within the short term anyway, and it just dropped off the face of the earth. So there's obviously going to be a few sellers involved. I mean, there were probably some here getting involved with this change of character and stuff, but it's the wrong side of the market. It just smashed straight through. We're in this weird range now, and I'm looking for that to get taken out, because the reason I've got this open is because of this accumulation area. We've got this nice accumulation here, and if that gets swept into this zone and we get a nice sort of impulse and another sweep of liquidity, it could be valid for buys, but the highest probability would be for the market to come down right into discount, do like some sort of daily flip or a break of structure, or go really low in the market, or even the change of character. But what I like to do with these is get refined areas, so that's been mitigated by here. So if the market reaches this zone, we can do a 4-hour, whereas if it just taps into here, that's a weekly demand zone, so you want to go down the next time frame. So unless it mitigates a refined area, say it comes down here and it does mitigate this area, that is a daily order block within a weekly, so then we can look at the 4-hour. But looking at the 4-hour from a weekly is it's possible, you can get them, but it's less probable, so that's obviously not as good. So yeah, with this, I mean, there are some aggressive plays you can do, looking at where the market is. It's kind of ranging, and it's clearly, there's no breaks of structure or commitment. But what we have had is we've had this inducement swept in the market, and we have had couple of sweeps of liquidity into this supply multiple times. We've had this failure or potential retest of the highs as of now. So I mean, what we're ideally, if we want to look at anything here, we want to look at this to break and maybe come back down into here. So if that happens, I will be happy to potentially play an opportunity from the extreme of the 4-hour. So it just gives you a bit more opportunity in the market, and I'd probably look even on the 1-hourly because of where it is. When you're looking at lower time frame trades, you want to look closer, and you can even look at the 15-minute. But my stop losses will always be the same regardless. I'll always have an absolute minimum of a 30 pip stop. So it would have to be something like this and get a 1 to 3 out of it. So you don't have to call the whole market. All you have to do is get a segment like this for a 30 pip stop. If it is going to go anywhere within this range, you want to look kind of in the extreme levels in the discount, and I'm sure, providing it doesn't move off, it should execute and take profit. So there's the rundown there. I'll just quickly show you the DXY as well before we wrap this up. So I like to look at the DXY as an inverse correlation to things like gold and the EU and all the other kind of pairs that correlate to that. They're not always going to, but essentially the US dollar is the inverse correlation to any pairs. So say you have gold to the US dollar, it's going to be the inverse of the DXY most of the time. But the issue with the DXY is when you're looking at where it is, sometimes it can confuse you. I wouldn't look into it too deeply. I'd look at it as a secondary confluence before you take a trade, because the amount of times you can save yourself from taking a bad trade because of where the DXY is and what it's likely to do. If it's sweeping something, if it's all the way up here in this area and you're looking, it's going to be short, which means gold and like EU is all going to go up. You don't really, if the market's going to be bearish, you don't want to be taking a short on the other pairs essentially, because that to me, if you're looking at shorts and the DXY is bearish, you probably stay away from it, and most of the time it will be a good secondary confluence. But what we're seeing right now is this continuation. We've obviously got the sweep here. It looks like it's still bullish. There was some sort of bearish action here going on, and I did think there was a potential for it to short from this area of the market, but obviously it hasn't. So we are looking overall at the DXY continuing its bullish momentum. So we are looking pretty much shorts on most of the other pairs. But I can link which pairs in the description. have the correlations between them, and obviously we can just go from there. If you need any questions about DXY or how to look at it in sort of an inverse, just let me know. But I try not to deep it too much, because the amount of times looking at low time frame trades, you can't really tell. If you're looking at the 1 hourly or the 15-minute on there, it's going to be delayed essentially. You're not always going to find the moves are going to be exactly the same. Just the overall direction is going to be the same. So if you're looking at something like this, this range has been targeted, or if it wants to go up here, it won't be exactly the same. It won't be a complete perfect um, negative correlation between them. So yeah, there's another one with AU and the New Zealand US dollar. So both of those two, obviously opposite. So if you're buying on one, sell on the other. So there's a few different correlations of pairs you can do. I don't like to go too much into detail with it, because when you backtest, you don't look at any of that. I don't look at the DXY when I backtest. I don't look at inverse correlations between pairs. So all of this stuff is second to none. You want to do it at the very end. You want to use it as a final confluence, just to guide yourself. But sometimes if you think the trade's going to do really well and there's no news and stuff, and it's quite a short one, you can probably get in and out quite quickly, but you just have to be aware of these things. So yeah, it's that's the rundown of the week. We'll see what happens in the new week, see if I've got any profits, and yeah, I'll come back to you next Monday. So see you.